evening, traders from across the globe, and welcome to the 1022nd edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video, the 1022nd video, is being filmed on Wednesday night for Trading Thursday. That would be May 16, 2013. As we know, futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. Please make sure you know that, and make sure that you know that a stop is your best friend. Never trade futures without stops. All right, traders, so what's in store? What I'm going to tell you is that this video is very much like the same video I did 2 days ago and the one before that. Why? Because on the board says the same thing, traders. As we have studied this topic many times together at the Omni site, when in a bull market, we buy the dips until it hurts. We have been buying the dips all week. We have been buying the low every single day in NASDAQ and S&P so far. Hooray, technical analysis. Now, we know this. Put your stop in, because tomorrow doesn't mean we're buying the low. Tomorrow could mean we think we buy the low and it drops 1,000 points, right? So put your stop in, but we are buying the dips again tomorrow on Thursday, and I will show you some charts that will absolutely make you want to buy the dips. Traders, the tranny looks great, the Dow looks great, the S&P looks great, the NASDAQ looks fantastic, the DAX looks good. What else do we need? We got to continue to buy the dips, and I am going to show you why right now. With no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another Omni Camp live in Las Vegas. Omni Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Traders, the first chart you will see this evening is the NASDAQ daily bar chart, and oh my goodness, simply divine. Does that speak volumes? Look at this wonderful chart. This blue dotted or dashed parallel channel has been working really well. This F flag, we've been buying the lows almost every day right at this F flag. It has worked very well. Until it hurts. I am not going to stop buying the dips. I do not want you to stop buying the dips. I don't want you to listen to any of these pundits out there that don't know how to read a chart, that think they can put this stuff together in their own heads. Forget those guys. Use the charts, because that's what works. Let's move along. Traders, NASDAQ on the weekly bar. Look at how long this parallel channel has been working. People were trying to call this a head and shoulders, and I had denied it every time, and I said I do not think that's what this is. I don't think that it could be a head and shoulders, because it can't be one by itself. You'd have to have the S&P, the Dow, the tranny, you'd have to have the Russell. You know, you got to have everybody in agreement. We do not have everybody in agreement, so I never thought this was a head and shoulders. We discussed that many times, and it was not. And look at us taking off, traders. NASDAQ on the weekly looks absolutely fantastic. Let's continue. Look at the E-mini S&P. Big F flag. Look at the result. You stayed in it for weeks and weeks on end. Another F flag leads to another F flag. We break out of that F flag, and look at us today. This market looks fantastic on the daily. Let's look at the weekly. Traders, the E-mini S&P on a weekly. Big parallel channel, goes all the way back since the crash lows of 2009. This little blue secondary channel was holding us in check for quite some time. We have blown past the blue secondary channel. This yellow line right here would represent, now blue, would represent what the previous highs were from 2007, that 1576 area. That's what this line is. We're well above that. We're well above the secondary parallel channel, and we're heading towards this main parallel channel now, the primary parallel channel, and that's about 1680 at the top of that channel, traders. So It looks fantastic when you look at the daily and the weekly on the E-mini S&P. Then we have the gold traders, metals. Look at this wonderful chart. My goodness, is the Omni strong in the metals. Omni says at 1780, we start doing videos, we hold live classes, we tell the world, it looks like it's having some trouble up here. Omni warns about a possible top. We get down to the price of 1680, I start doing videos and I show a series of repetitive patterns, and I say, Omni makes an official topping call in gold. Gold has dropped since then all the way down to the 1340s. The 1340s. It has been pummeled. Traders, we expect more downside. Look at how it came back up, got right to that parallel channel and got hit again. We expect more downside on Friday for gold. Let's go look at the weekly chart. Gold on a weekly chart, traders, as you know, last week this was my nemesis. I could not stand waiting to get lower than the 200. We didn't know if it was going to actually hold at the 200 with those 3 bars or go lower. In turn, it went much lower than the 200 bar moving average. That gives us our selling papers, baby. That allows us to march. It gives us our marching orders. Sell, sell, sell. That's what you would do in gold. That's why we have been recommending selling since the highs were called. Then you have something like silver. Silver is total confirmation that the gold is breaking down. Silver on the weekly breaks the 200 bar and just plummets. Then creates this bear flag that you see right now. Breaks out under the bear flag on Wednesday. I think Thursday this market heads much lower. Traders, if you like the analysis that you're seeing in this chart segment, please come on down to livewithoscar.com. Fill out your OmniCamp applications, and you can spend a 4-day training session held live here in Las Vegas with me. So, traders, you've seen the charts, and there is my technical argument for the green Omni, baby. Green Omni once again. Now, I gotta say, traders, you would think by now I'd be putting up a red arrow, right? But Omni comes up green, and that is it. Traders, once again, congratulations to you T-shirt contest winners. Yesterday in the video, I asked you to send in your trading desks with you in front of them. And if you do that, I will send you a T-shirt. I'll send it to the contest winner. Well, as it turns out, I gave a T-shirt to everybody who sent in their trading desk. I think your trading desks were so cool, everybody gets one of these T-shirts. Traders, I'm going to give out more T-shirts tomorrow at the site, livewithoscar.com. If you'd like to win a T-shirt, come on down to livewithoscar.com. Hang out in the trading room. The trading room is free. I'll tell you what the contest tomorrow will be about. And by the 4:15 OST close, you will have won a T-shirt. Traders, I'll see you at the site. I'm getting out of here. I want to go check out markets. I want to watch for the gold to get pummeled. I want to watch for the NASDAQ to end up on the upside. And I want to do all of that with all of you in my trading rooms. Traders, remember this. Always try to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, baby. Video number 1022, and you continue to buy the dips until it hurts. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.